All right, welcome to our opening range live stream for Friday, June 24. We haven't done this before, but I thought it'd be a perfect opportunity to be able to walk you all through the morning, this Friday morning, highlight some of the things that I look at when I'm day trading in the morning, as well as answer some of your questions and prepare for our upcoming class. So good to see everybody. All right, so let's start preparing for the morning. We'll be here together for about an hour. Again, looking at the opening range, I'll explain some of the terminology and some of the tools that are on my chart. And just generally, we can take a look at the open here together. So this will be great. And then one of the things that I want to also do, because this is what we do in the Sector Secrets Mastery, is we do keep notes. So every day, pretty much Monday through Friday, I have notes on market action that I send to the Sector Secrets Mastery members, as well as the, I don't know if I want to call it a newsletter, but I guess that's the closest thing, called the Raghee Report, because I love alliteration, that I send on Sundays. All right. So these are the notes. These are daily notes. Then we have the weekly Raghee Report. And so you're going to get a sneak peek at the notes. So yes, I do a lot of typing when we are doing these sessions, because the idea is it's easier for a lot of the members to keep up with the way in which, especially when we're day trading, it's a lot easier for members to keep up with what I'm doing, hot zones that are coming, setups, zones, levels, general directional bias, if we have these on the screen all the time as I am on the mic, right? So usually we don't do the camera thing, but for our live stream, clearly we are. And yeah, so normally no one needs to see my face while we're trading, but yeah, that's how it works on YouTube. All right, so let's get to it. A couple things to kick off with. And as we go through the notes, so if you're a member of the Sector Secrets room, I'll be sending this link out to you shortly. There were some questions, and I'm going to do my best to answer them, about where some of the previous live streams that I've done are sitting. So I'll do that here real quick. And again, opening range, for those of you that are joining us, I'm just going to make sure that everybody has this link in my mastery. Okay. If you click on videos, some folks were asking me where the non-farm payroll video was. And you'll see this little image there. It looks like a computer and a coffee mug. I know, me and a coffee mug, right? Those are going to be some of the special events, the weekly show. And here's a CPI. Here's a CPI video. All right. So this is the hot zone live stream for CPI. And then we had a hot zone. So if you just go look back at the channel, you'll be able to find it. And then there's another weekly show, and there's the non-farm payroll run. The non-farm payroll run ran June 3. And you know what? I'll probably do it again this coming month. We'll go ahead and do another hot zone live stream for non-farm payroll. Why not? Why not? What I like to do with that is sort of put the day trading process and the HPMRs through a stress test, through their paces. So we'll definitely do that. So for those of you wondering, okay, if you're a member of the Mastery, what do I do? Well, I copy this link and I send it over to the members. So they keep, so it's not just a weekly newsletter they get, it's also this daily update that I send them as well. Okay. So this is the Friday session. I just call them Raghee Notes. And that is, so you're getting a glimpse of what they get sent to them every day, every trading day. All right. So hopefully that will help with where some of those videos are. Another thing we need to take a look at is where are the hot zones for today, right? Today's, and if you're a day trader, you've got to know what these hot zones are. And there's not major ones today, but anytime we have, we already had Bullard. So we had FOMC Bullard. It was at 7:30 a.m. Eastern. Then we've got new home sales. And you got to know the time, gang, of these events, because this is when the volatility is going to kick in. And we also have University of Michigan consumer sentiment also at 10 a.m. Eastern. So we'll be able to sit through those volatility zones together. Maybe we get a first come, first serve setup using the HPMRs. Hopefully I can show you one of those here today. All right, so that's, again, just kind of starting what it is we're looking for. Then we move on to little things like, well, what direction is going to be the dominant psychology in the markets that we like to day trade? Now notice I've got 3 charts on this screen. And this is how I like to day trade, keep an eye on my swing trades, and also have a little sliver of a chart where I can see my wish list numbers for my portfolio positions. Gang, in one screen, and you could be doing this on your, I've got my laptop here, and I have this same layout on my laptop, and I can do this kind of analysis very, very easily. So I can keep track of all 3 of the time frames and time horizons that I like to know what's happening with my trades and even longer term positions. The reason, I'm going to tell you something right now, gang. If there's anything that a lot of traders ignore, is the importance of the daily time frame to their day trades. And if there's sort of a secret, I guess not so secret now, it's day traders really do need to see what's going on the daily. It's about 3 different things that I calculate, 3 different what I call line in the sand levels, the most common of which you've probably heard me talk about, whether it's in Charts and Coffee or the free videos that I do over at the Simpler Trading YouTube channel, is the previous session close. That's the most basic one. And I share that one freely because it's a really common one that I think a lot of traders just overlook because it just seems too simple. And really simple. Are we above the previous session close? And it's not just are we above. See, are we above or below the previous session close? And today we are clearly above, and that is bullish directional bias. Okay. Now, this is just a sliver of the kinds of things we're going to talk about tomorrow when we have our class. So I really wanted y'all to get a preview of what it is that I do. Okay. And I know a lot of you are saying, Rog, when's the class? It's tomorrow, gang. We've got just over 24 hours. I guess about 29 hours before the class starts tomorrow. So we have bullish directional bias, but we want to do this individually. We just don't want to presume that every single one of the indices does have bullish directional bias. So it's a good habit. Go through the Dow, the Russell, the NASDAQ, the S&P, go through gold. Take a look at what's happening in the bonds. Make sure you understand what's happening in, say, the 6E to get a good grip on what's going on with the dollar. So we can go through a number of symbols that are day tradable and get this line in the sand. Okay. So I'm going to say it's bullish directional bias for indices, right? We'll just keep it to that for our purposes here. All of this can be done before the bell. So one of the questions I get is, Raghee, are we ready with a watch list? How can we go through the process of knowing what to look at once the bell rings? Since, the HPMRs that are included with the class, depending on which level you take for a certain period of time, the idea that I'm going to be able to watch actively and track for 5 dozen symbols and their HPMRs is unrealistic. Most of the work that great day traders get done is before the bell. They already know directional bias and they already know what's going on with overall movement intraday, right? So those are the things to keep in mind. And again, these are the kinds of things that I'm going to teach in the class tomorrow. So take a look at the 6E here. The first thing I'm going to look at on 6E, and what I do is, we're going to do this in live trading. So if you're wondering, this is a great glimpse. Type this in. I do a lot of typing during the day. It's a great glimpse of what live trading will be like for the class. All right. Check that out there. Okay, so what I'm looking at right now on the radar, so to speak, I've got the 6E. So I'm going to keep an eye on that. Gang, I think a lot of day traders just jump into trades, especially once the bell rings. We're not horses or greyhounds. Just because the market's open doesn't mean that we just start slinging trades. We want to wait for high probability setups. So we've got the 6E on the radar. Notice my S&P is nowhere near a level quite yet that I can do anything with, but I would keep an eye on, let's see here. Feel my thinking face as I'm processing this. You know what's really cool though? It's really not that much to process. As long as you can see dots, colors, and zones, there's not anything, if you notice, and I'm doing manually. I'm just waiting for price to reach certain levels, whether that be certain levels of resistance with the HPMR or slow stochastic. And by the way, and I'm going to make sure I'm 100% right on this, but yes, everything on my screen right now, these are the indicators that are included with the class, right? These are the indicators that are included with the class. So I'm looking at my slow stow, getting overbought, and we're going to keep an eye on the ES, and I'm going to just jot some prices down. Normally I'll just write this down, but since we're doing this in a live stream, I'm looking at anything from 34.50 up to not 30, 38.47, and I'm looking at 38.54. So I'm just going to mark those levels down. So again, I've got an idea of, and I think a lot of you know this, right? No trigger, no trade. What's a trigger? It's a price level that the trade that we're looking for could be actionable. And if you're wondering, what are we looking at here for a potential short? Do I love shorts here today? I don't. That's really just resistance. That's really just resistance. I'd rather focus on long positions. So this is going to be resistance. Oh, what about support? We go right back to the HPMRs, gang. We go right back to the HP. So I don't have to mark anything manually on the chart. What I'm looking at here, then for support for the next 25 minutes will be 38.23.5. And then I'm going to be looking at 38.17.25. Right, those are going to be support levels. So just have those on the radar, and I'll just keep scanning through the market. Day trading doesn't have to be in and out, in and out, in and out. In fact, I don't believe that's the way day trading should be at all. We really should, as we would in any type of trading, find where we have an edge. And in this type of approach, your edge is literal. It's quite literally the edge. And in chop, which is what we have right now, that's what we have to keep in mind. In chop, this is what we're looking at. All right, hang on. And a lot of times I will put orders right in on my phone. So if you see me kind of looking down here, I just put in my orders, or at least alerts. Okay. So there is, what I will, based on time and volatility, consider an edge. For those of you wondering what the dotted lines are of the HPMR, these are the very lowest amount of volatility that we could expect. And yes, sometimes we're going to operate from those low levels of volatility. That's another hint that the HPMRs give you. And that's going to be a lot of what the class is going to be about. Right now, we know we're in a far more sideways market with quite low volatility. I'm not guessing at that. We're looking at historical levels telling us that's what's happening right now. Okay. All right. So moving on then from NASDAQ to, and I'm going to actually make sure I've got all my windows open that I want to have open, because when I'm day trading, because everything is automated, I really don't have to have that much up at the same time, even though I do have a lot open right now. And I'm going to close out a few things. There we go. I really don't need that much open simultaneously because, again, everything that's happening on the chart, all of it, not most of it, all of it is being automated. There's something else that's being automated right now, too. You can kind of see it. There's a slight shade right here. That is monitoring the clearing or opening range. That's the high-low that's being established between 9:30 and 10 o'clock. So that's also being monitored by the indicators that I have running on this screen, again, that you get with the class. All right, so I don't have an edge yet, literally. Let's take a look at what's going on with the Dow. Okay, so now I think a lot of traders, and let me show you a trap that a lot of traders get caught up in. That's a big candle, right? That is a big candle. And most traders, without an understanding of historical volatility, might think, oh, there's an opportunity here, right? Because it's a big candle. But notice how easily you realize how low the volatility is right now, and you're not at an edge, are you? So what is this? Imagine getting sucker punched into buying this, only to realize we're really not that high in terms of volatility. Higher volatility oftentimes is part and parcel with momentum. No major volatility moves are going to happen without more traders willing to buy at higher highs or lower or short at lower lows. So notice how it just kind of keeps you out of trouble by realizing that is really not that big a deal. It's a big candle, but notice now it's sort of that whole forest for the trees view. And there's not much that I'm going to do with a candle like that. I don't typically like to trade the Russell. And I'm going to tell you why, although we do track IWM and the RTY with the HPMRs. But keep in mind, how many of you like trading Russell? Just out of curiosity, how many of you would consider yourselves rather avid Russell traders? And I'm just looking over at the YouTube feed here. Quite a few of you. Now, remember this. If you are trading the Russell, remember that it is not a high concentration weighted index. There are not dominant stocks and sectors that clearly show whether or not there's bullish or bearish directional bias. So it's a little tricky, and it's not weighted with the same stocks or same sectors as the other three major indices, ES and QYM. And so Russell can and will often do its own thing. So if ever you've been frustrated with the Russell, you're not alone. And that's why, it's little things like that, things that we're going to go over in the class tomorrow, that make a big difference in your trading, knowing why something's moving, knowing what it's related to, knowing what it's composed of. And those are little things that when traders say, well, gosh, yeah, Russell was hard, or maybe I'm great at Russell, you'll know why. Because if you like trading with a separation from the indices, Russell's great. But if you like that synchronicity, if you like the markets moving together, Russell's probably not going to be where you want to look for opportunity. Yeah, I see a few folks that no to Russell, tried and failed. That's, again, whether it's working or not working, it's probably going to be for the same reason, that disconnect from the broader averages. All right, so a couple of questions here. Are the Darvas levels And let's see, Dorothy has a question. Are levels Darvis clouds and the high-low of the HPMR? So levels can be, when we're talking about levels, right now I'm focused, Dorothy, on the HPMR, whether that be the average, the high, or the low. And again, you can see how narrow a range we have right now. We won't have the clearing range levels till after 10, because a clearing range is a process of highs and lows that get put in during the open. So that's another stage of the morning. Another thing we're going to talk about, and you bring up a great point, Dorothy, is the day trading clock. So much of what day traders do, and it's just separate to what day traders do than other traders. Although everyone can benefit from the rhythm of the day and the rhythm of the week, day traders live it and they know it better than most, which is why it translates so much better to other types of trading, not vice versa. A great swing trader on the daily is not necessarily going to be able to make the transition to day trading. But if you've got a great day trading foundation, you're going to find that translates fantastically well to other time frames. And it just happens to be the nuance of day traders understanding order flow, order entry in a really acute, powerful, skilled way. And then also this rhythm of the day. And that's the clock. So there's so many times of day that are better than others. In fact, there are 5 windows of day trading. There's 5 2.5 hour windows of day trading that are just simply better than looking at the entire clock and assuming that every hour is equal to the one that came before. And I think a lot of you know, probably anecdotally, that's just not true. So what about the rhythm of the night? Michael, absolutely. It's a different set of financial centers. It's a different set of volatility levels. It's a different start time. Yes, there is a rhythm to the night. There's a rhythm to early morning Eastern time when you get Paris, Frankfurt, and London opening. There's another rhythm to the Asian close, right? And those things are happening between 2 and 4 a.m. Eastern. There's another rhythm to the pre-market, right? Before the bell rings. And those are the different windows of opportunity. We don't want to look at the entire day trading day as one big opportunity, because it's not. There's certain hours of the day, probably even more importantly than hours we do want to focus on, there's hours we don't want to focus on. And that's what that clock and this guide is really, a big part of that. It's all about making sure that you have an idea of that rhythm of the day. All right. So what about the rhythm? Yeah. And then of course, we call that the El DeBarge trade, Michael. Yes. Those of you that are children of the 80s will know. That's awesome, Michael. Yes, the El DeBarge trade. You got it. Why would we short with bearish direction? I really don't want to. Brandon, to your point, I absolutely don't want to. But I'm going to acknowledge both the long and short zones until, all right, let me show you something that's happening right now. And it might be happening on a number of indices. Yeah, it's already happening. Okay. So one of the most powerful tools that run on my screen are these very quiet 2 rows sitting at the bottom. And yes, this is included with the class. We call this the multi. It is the history of the market structure, not just what the market structure is now preceded. And that is probably one of the most important things on my chart. So for a while, Brandon was asking, why would I focus on a short? I can at least be somewhat neutral. See that? But what's happened? What's happened here? We've gone green. We've gone bullish. And that starts to drop the probability of potentially shorting into this resistance level. Could we still find fatigue level there and sink back down? Maybe. I certainly don't want to do anything until we get there, but the probability starts to drop. And remember, gang, we don't play in certainties. Everything on my chart is designed to help me with market structure and where the support and resistance is on the chart, right? And that's kind of what we do in the class. How do you read the tea leaves of all these tools? And I think maybe the first time a trader looks at this, it's a lot to take in. I completely agree. It's a lot to take in. But once you realize each one of these, as I like to call them, secret squiggles, has a job, then you know when to consider it, when not to consider it. So if there are any of our indices that are still, okay, Dow might be an interesting candidate. Notice the Dow is a laggard. One layer of resistance here, another layer of resistance up in here, still a neutral market. We could keep an eye on the Dow for potential fatigue. And if the Dow starts to fatigue, that's going to open the door to the S&P. And these are some of those insights, again, that we talk about when you understand what the S&P really is. It's a collection of stocks and sectors. Then you realize who it's more likely to move with and why it's going to move. All right, so let's see what else we have here question-wise. Thanks for the questions, gang. Good stuff. Good stuff. And as I mentioned, whether it be the Wednesday Q&A session that we did, and if you didn't check that out, that's going to be excellent preparation for the class, right? And if you're on the fence about whether you want to join me tomorrow, I get it. You know, it's a commitment of time, and it might not be something that you thought about being able to do, day trading. But since so much of what I do as a day trader is automated, that learning curve is so much easier because you don't have to calculate HPMRs by yourself. You don't have to understand how to manually determine what the underlying market trend is. Again, everything's on this screen. But you can check out the answers replay, and that could answer, I think, a lot of questions many of you might have. But let's keep going through with some of the questions. All right, moving on. Yes, I am already fully caffeinated, and I've moved on to this little energy drink that I picked up a while ago called Root, and I do like it. There's not a lot of caffeine in it. I think there's ashwagandha and carrot extract and ginger and guarana. Oh yeah, it's still going to keep me going, but it's good stuff. So next up is question-wise. So Lewis, Brandon, excellent. Is it a valid? Is it my preferred short? I mean, is the short my preferred angle for this market? It is not. It is not, and it's most definitely not. Look how clearly it becomes a be very, very careful or take smaller size micro options on the SPY or QQQ. And by the way, yes, can you day trade micros, options, and the futures with what I'm showing you? 100%. That's the whole point. Have the flexibility of the asset classes that you want to trade. So the probability for this holding goes lower the more the double green structure takes a hold. And since we're already so clearly above the line in the sand, again, there's far more bullishness than bearishness. But let me talk to you about this. A lot of you might say, but Rag, it's the clearing range. And if traders are going to have a level of fatigue, you know, where would it be? This is where it would be, gang. This is where, from a time and volatility-based level. And by the way, a lot of traders were asking me about, you know, why do these HPMRs need to be updated, Rag? Isn't this just, you know, once I have the HPMR, I'm all set? No, gang, because think about it. Look at the volatility of just the past week. Look at the size of some of these candles. That's more volatility just in the last week, as we're getting a reversion to likely the wave. That's my mean that we're getting here. We're getting a retracement to the wave. We're getting a trend following short the rip that's brewing right now as we wind down this quarter. Not surprising. We've been talking about this for some time. But it's also increasing the high-low range historically, and it's going to affect the way in which the zones are going to plot. The reason these are as accurate as they are is because myself and the Lorna bot are looking at volatility almost every day. Clearly, when we have events like 2 days of Humphrey Hawkins testimony, definitely when we have the end of quarter rebalancing, non-farm payroll, different high volatility events or a prolonged period of high volatility is going to change the way these will plot. Okay. But can you put on a trade and manage risk with something like this? You can. It's not the direction I would recommend, but the way in which you would do this is exercise a lot of caution, meaning the asset class you use. A lot of traders underestimate how much the actual asset and the size make a difference in terms of controlling risk. a big part of the class tomorrow is making sure we understand position sizing and defining risk. And if we're taking on a trade that's positioned to be in a trickier spot based on directional bias, and yet we think, there might be some interesting right there confirmation, rather than passing on it altogether, if you're a slightly more aggressive trader, and I'm actually looking at my charts on the other screens right now, if you're a slightly more aggressive trader, how can you put that trade on and not risk a disproportionate amount of your account? How can you control risk? And that's a lot of what, is, I think, what every great day trader understands, that every open trade is risk, but every open trade should not be catastrophic risk to the account. And a lot of traders who blow up accounts, whether that be longer term trading or day trading, what they're missing out on is what I consider very much the holy grail. And that is position sizing and risk management. And that will definitely be something we'll talk about. So in this case, we would have to think a lot about, how do I control risk in this area? Now, one thing I do want to point out, whether we accelerate higher through here or not, I do want to point this out, because this is, almost like a proud mama looking at her, her creation or kid. These indicators are amazing because, I'm a little biased. But look how we are actually stalling here. There is a very visible response to what's happening. The whole point of putting anything on your screen, the whole point is not that we know it's going to be resistance and hold, or not that we know that resistance is going to create a catapulting action higher. These are all reaction or decision levels. Any level that you've drawn on your chart, the reason you've drawn it, whether you know it or not, or the reason the indicator is plotting it, whether you know it or not, is we're expecting there to be some sort of reaction. So whether this ultimately holds or not, the fact that it's holding here, that it's really stopping and pausing, tells us historical volatility is extremely powerful. Take a look at the Dow. You know what? Let's also take a look at things like gold and bonds. All right, so gold is a trade that I'm sure some of my traders are already looking at. What I'm circling here, gang, is what I would basically consider to be my visual checklist. And it is a visual checklist. Once you get in the habit of knowing how to scan up to down or down to up what's happening on your secret squiggles, that's what I love to call indicators, you start to realize, okay, overbought resistance. Okay, we're at the resistance of the HPMR. Are we neutral? And you start to scan. Different environments have slightly different nuanced checklists. So a big part of what we're going to be doing is kind of giving traders the edge of building the habit of having a checklist mentality. How many of you have read, and I love this book, The Checklist Manifesto? Have any of you read that? Checklist Manifesto, Atul Gawande. If you haven't, it's a weekend read. It's an incredible read, and I would highly recommend checking it out. And what it does is teach you that every scenario has a checklist. It's not just one master checklist. Every scenario has a checklist, okay? And in this case, I'm actually going to take a snapshot. Oh, gosh, yes. I'm going to take a snapshot of this trade, and this is going to be a fantastic chart. And this is actually a textbook trade. And why do I say that? Because when I go through the neutral market, HPMR, line in the sand view, gang, this is pretty darn close to perfect. Are there perfect setups out there? No, that's why we need checklists. And then we ask ourselves, of the boxes that we need to check, how many of them can we check? Even more importantly, we ask ourselves, which of those check marks are non-negotiable? Because let's say we have 5, 6 different criteria, but certain criteria are not met. Certain criteria not being met can be either a reason to reduce size, and you need to know that, right? Certain criteria can be a reason to not take the trade. So a lot of times when traders create a checklist, they think that every item on the list is of equal importance. And that's not exactly true. Certain boxes need to be checked. And if certain boxes are not checked, they present possibly a different type of risk to the market, to our trade. Does that make sense, gang? And let me make sure I've got this live stream front and center here. Yeah, one of the great things about having lots of monitors is, well, you can keep an eye on a lot of things. One of the downside of having lots of monitors is you can keep an eye on a lot of things. So let me make sure I'm keeping up with the questions. If you see my head on a swivel, that's because I'm kind of sitting in front of this cockpit of a television and 9 monitors. I actually want a 10th, if nothing else, for symmetry. So we'll probably be working on that over summer. All right. So, by the way, my day traders, scale out as we break down through 1824. Scale out as we break down through 1824. Excellent checklist on gold. Excellent checklist on gold. And yes, a tool go on day, the checklist manifesto, absolutely a powerful setup. Really powerful setup. Mindset for setups. It's a powerful mindset. And it's not even a trading book. Some of my favorite books are not even trading books. Okay. Now let's go back. And I don't know why, but a watch pot never boils. So we'll go back to the indices in a moment. But let's take a look at crude oil. Crude's actually setting up right now as well. And mind you, one of the things that I remind my traders is that, and I know I try to get everything today. We're managing a multiple rooms in the live stream. Normally, I'm able to take a lot more notes, but we're going to put crude oil on the radar. Lorna bond. Oh, see, this is what's so great, and I know I'm looking at the room as well. And whenever we do classes, I love this. One of my favorite things is when we start reviewing some of the trades, and a lot of the traders say, "Rag, it was already on my chart. I front ran you." A lot of the traders will get in, and Bot just reminded me, nice gold trade. I front ran you. Of course you did, because you saw it on the screen. It's already plotted as resistance. And yeah, great. So a lot of you probably, how many of you front ran me on gold? I love it. And what does that mean, front run? That means they saw the trade because the zone was there. They knew the checklist to look at, and they took the trade. Sometimes the fills are better than mine. Not going to front run me on crude, Bot. Not gonna. So we're going to keep an eye on this area in crude, CL. So somebody might say, Rag, yeah, thanks for looking at all these futures charts, but I don't trade futures. And that's okay. If you don't trade futures because you haven't been taught how to yet, we're going to have some slides on how to make futures ridiculously easy. How easy is it? Gang, I started trading futures when I was 15 and a half. It's not complicated. It's intimidating. I get it, but we can lower the risk in a number of ways. Day trading is one way to lower risk because you're reducing exposure to how long you're in the market. But leverage is always going to be a thing. All right, gang. So right in front of your eyes, once again, this is why I wanted to do this session. So you could see, look, gang, I don't know what's going to happen. I don't. I like to stress test these things in front of you all because I'll be the first one to admit classes are a big investment of time, right? Live trading, 4 hours on Saturday. Whether or not you really want to day trade or not. So to me, if I can show you these things in real time, then you can say, oh, wait a minute, Rag, that HPMR was a needle mover. And your funny little secret squiggle that's going green and red with the white arrows and your little yellow bar, I'm already seeing the setups. Imagine what you're going to learn after 4 hours of my showing you checklist after checklist, setup after setup, understanding line in the sand. So you know to be mostly looking at the long side when we get down there. All right, gang, you know what we're after next. I think because today is Friday, we can take a look at a little bit more aggressive and optional exit, 105.60. If not, please scale out at 105.80. All right, scale out. What does this terminology mean? And how are we going to cover this in the class? One of the things that seems to be lost in trading nowadays are traders understanding that we scale in and we scale out, and we don't just play A to B, but we're always open to continuation through one level to the next. What if the market keeps going? And what gets frustrating when you don't know how to scale in and scale out, it's far riskier to manage. And so we know we have bullish directional bias. We eliminated the short side as soon as the multi-trend started to do what? Told us, don't short the market, right? I'm not having to necessarily, although it's nice to be able to, but I'm not having to go back to 30 years of experience saying, oh, I've seen this before. How do I trade and teach other traders to get the hang of this quickly? We automate stuff. We're getting new home sales and consumer sentiment numbers now. We're going to see some volatility. Which way are we expecting it to go? Likely to the upside, right? Which way is crude likely to go with that? Well, hopefully to the upside and through 105.80. So directional bias, I cannot emphasize enough. The things that I'm going to show you to look at on the daily time frame. Holy cow. Okay. The things that I'm going to show you to keep you from stepping in front of things like this. There was a brief period of time where I said, yeah, maybe we look at a short, maybe, but it's low probability, right? I want to show you both when HPMRs get blasted through and why. Gang, I think a lot of folks feel, well, Rog, I'll just put the HPMRs on my chart and just play ping pong. That's not how it works, gang. You've got to understand when you are fighting certain psychology. And that was it right there. Crude oil and gold, you'll notice, perfect examples of following that daily to 5-minute to playing in the direction of the path of least resistance type setup. Far easier, far better. There's a big difference between what we saw in the indices today, where I might have been open to a controlled risk short, and then if we go double green, we don't want to do it anymore. And while I will say, some traders say, Rog, we have a low risk setup in that area, this is what can happen. So I'm kind of glad that the multi-trend said, Rog, you really want to tussle with me? You really want to argue with me? This is it. My own tools remind me of my rules, right? You really want to argue with me, Rog? You really want to argue with me, Rog? You really want to go on the lower probability side? And I saw a lot of traders in the where the heck is that? Okay, the room and the live stream saying, Rog, we don't want to short this. This is why the color coding is really simple. I will say, I don't know that we had a good clean buy. I don't know there was a buy set up. I would love to say that there was, but at very least, when traders ask, Rog, how do we know not to short? Does everyone see that? I know we're covering a lot of stuff, and all this will be far clearer because you'll understand the process going through this head after the class. But does that make sense? Does that make sense in terms of the way in which the tools will tell you, yeah, this is low probability. This is the path of least resistance. This is something that you may want to do with very small size. But remember, we talked about the hot zones right here. It is very dangerous. And if it's not a big reminder, it's really dangerous to put on low probability trades right in front of a hot zone. There's evidence of that. So, I think sometimes our tools, and then that's going to map to our rules, should tell us just as much when not to trade than when to trade. Think about that for a moment. A lot of times traders think their indicators are all about this is where you get in, and this is where you get in, and this is where you get in. How about a tool that tells you don't put on this kind of trade? It's lower probability. Does that make sense? And when you have things like that, it's going to spare you a lot of pain. It's not just about how can I get in. Sometimes it's why would I not get in? Let's go back to crude, which is just tagged 105.80, and my phone just buzzed. All right. And again, how simple is some of this trading? I can do it on my phone. We're not doing complicated spreads and things like that. So okay. All right. Let me make sure I'm keeping up with some of these questions. And yeah, Janelle, you know what? I think, look, clearly when we get into a class, we've got 4 hours of an immersive environment where I can get into a lot more detail. But, anything that I do when I'm doing these live streams, whether you're a part of, the class or not, I want to at least give you all some tidbits that hopefully keep you out of trouble. I mean, that's really, again, what I want. Even again, if our paths don't cross again, my mom used to say, leave something better than you found it. And I hope that this time is, one, kind of whetting your appetite for tomorrow for those of you that are already signed up. And two, if nothing else, you'll realize, oh, that line in the sand thing that Raghee taught me, gosh, that saved my butt a bunch of times. And that makes me really happy too. All right. So Bill says this is slowly sinking in. Yeah. All right. Very cool. And sometimes it does take some time. Yes. Sometimes it does take some time. I'm with you. All right. So let's circle back to crude and gold. Okay. We got a couple cool examples of when the tool said, don't do this, Rog, and do this, Rog. So crude, HPMR, we had the 105.60 optional, 105.80 first target. What's the second target? Now we have the luxury of going to the opposite end of the range. Okay. Profit targets are really important, gang. We'll be getting into a lot more about why I placed them, where I placed them in the class. But let me mention this. If we continually place profit targets that are ignoring the volatility of hot zones, so we're not maybe scaling out when we can, not when we have to, and if we're looking for overly ambitious first targets, which I find a lot of traders tend to do, they tend to place overly ambitious targets that are so far gone that they've had an unrealized profit that they did not scale out of because due to many, many factors, from position sizing to just not understanding volatility, they were expecting the market to go somewhere that was very low probability that it would. And then they let a nice profit and go by the wayside, and they think, wait a minute, I had a good entry. How come I didn't have a winning trade? And I know a lot of you, because I was there once upon a time too, until I realized that it's probably equally important to place a smart first target as it is the stop loss. And then I thought, wait a minute, the first target really is part of the risk management. And I'll teach you more about that tomorrow. But that first target really is very much how we control risk. And I know that doesn't sound common, but most traders are not thinking about the first target in a tactical way where they can move a stop to a break even and then see how far the market can go. That's part and parcel with scaling in and understanding hot zones and position sizing. So here, the timing made sense. The level was met. I knew 10 o'clock Eastern was a hot zone. So the timing, sort of this eject button, as I like to call it, eject button, we're right in front of a time-related volatility event, AKA hot zone, and we're reaching our target. Moving to a break even spares you from this. Moving to a break even also opens up the possibility that we might be able to get a second setup, right? So here's a great example. And those of you wondering, the scaling in, scaling out thing, Rob, how does that work? T1, scale out, half the position, move to break even. I think a lot of you probably heard me talk about this before, but notice how important it is to understand where T1 kicks that off. And that's why I say learning how to place a first target is probably one of the most overlooked aspects of risk management. So there you can see it happening live in gold. A 4-point trade, easy 4-point trade to a break even. Hey, I'll take 4 points in the matter of 2, 3, 4, about 4 candles, right? That's 20 minutes. And then I know the hot zone's coming up and we make adjustments. So hopefully hopefully some of these examples are resonating. How's everyone doing so far? Is this kind of giving you a little bit of an idea of, okay, this is not super active trading. We know where the zones are. We know where the targets are. We can trade this with GLD puts. We can trade this with micro GC. We can trade this with gold futures, right? It doesn't have to be futures only. It doesn't have to be ETFs only. And the zones are just right there. And most everything else that I do are fairly simple, formulaic, arithmetic, processes. I'm an English major, gang. I'm not doing trigonometry back here in the background. So it is relatively simple. All right, what is the difference between the two colors at the bottom? Sure. So JR, that's called the multi. And again, it does come with the class. And this is a study of the 8, 13, 21, and the bottom row is the 34. So I study these exponential moving averages to understand structure. That's what I'm focused on here. I use these to understand structure. And that is a big part of, well, a process that I teach. Structure dictates strategy, and strategy dictates indicators. Most traders do the opposite. They have a favorite indicator, they apply it to everything, and the indicator has its own strategy, so that's what they deploy. And then they wonder why the results are 50-50 at best, because structure dictates strategy. Or for my golfers out there, or fisher men and women out there, if you like to fish, do you just pick your favorite lure? No, you look at the water conditions. Top, mid, bottom. What about the color? Brackish, clear? It's going to change the bait. It's going to change the lure you toss in the water, right, that you cast. Golf, the shot, the lie of the ball dictates the club, right? We know this in every other part of our life, but for whatever reason, we tend to abandon it in our trading, right? Because we have a favorite strategy or we have a favorite secret squiggle. So that's definitely something to keep in mind. Let's go circle back to what's happening in bonds. I do have a lot of interest in bonds. And yeah, I don't want to short bonds today, intraday. I was kind of open to that possibility. We're now crossing that threshold of the line in the sand. However, I'm not going to rule it out completely, but I know that we're stair-stepping higher. Do you see? This is another cue from the HPMRs. You see this? So stair-stepping higher. What does that insinuate? If you were to take a short, you don't want to have an ambitious first target. We never want to, but you really want to have a prudent first target. And that's where a lot of traders sort of taking a more aggressive entry don't understand how to put a first target out there so they can take a winning trade, but they're not being unrealistic about downside expectations when there seems to be a little bit more bullishness, but maybe a short does trigger. Do we want to be long in bonds? We want to be long in bonds. Intraday, we want to be long in bonds. Okay. What about volume? Yeah, Maria, there's some cool things that we can do with volume using TradingView. And those would mostly be things like what I call volume ledges. And yes, TradingView is a fantastic platform for this. And of course, the indicators are available on TradingView. I know a number of you love this platform. The bot loves this platform. We have a lot of members who love TradingView once they realize that it's broker agnostic and it's web-based and works great on a Mac and it works great on a PC. And it's just a fantastic platform. One of the things that it does do is it gives us volume ledges. So yes, I will keep an eye on these and I will look at price-based volume. Yeah, it's not necessarily in this environment, especially during summer. Maria, we have low volume during summer oftentimes. So volume is not necessarily going to be your superpower in summer, but time and volatility will be, which is why, especially in this environment, time and volatility take precedence over even, in some ways, volume. And again, low volume environments, we have to lean on time and volatility, other factors a little bit more. So great question. Do HPMRs only work with ETFs or underlying stocks? Oh gosh. Yeah, great question. So here's Apple. Here's Microsoft. Here's crude oil. Well, it'd be good if I typed it in right. Here's crude oil. There's the S&P. Here's the SPY. All right. So yes, we have the HPMR pack that comes with the class. It includes stocks. It includes ETFs. So what the bot and I do is we go through the markets, we look for beta, we look for volatility, and we put together a list of stocks where the HPMRs are working very, very well. We have the right kind of beta, and ideally the options are quite scalable. So while Tesla and Amazon, well, Amazon not so much anymore, but Tesla can push the upper end of affordability. There are stocks that we do have HPMRs for, but they're a little bit pricier. Mostly I'll plot those because they're heavily weighted within the indices. But most of what I'll focus on are very scalable options. And what do I mean by that? Scalable options. What's exciting about scalable options is, for the most part, whether you have a small account, a medium-sized account, a large account, or a Godzilla-sized account, they're scalable. The small account might buy 2 contracts. The medium-sized account might buy 4 or 5 contracts. Large might buy 20 contracts. Godzilla-sized account, when you're sticking with liquidity, maybe they bought 50. I'm just kind of giving you the scalable mindset of you're not always going to have a small account. And as you grow, the process by which you do any kind of trading, including day trading, must grow with you. It's not as if when you have a certain size account, you change the way you trade. Not at all, right? When you understand the holy grail of position sizing and risk management, you realize your account size will tell you what's affordable and how you will scale in and scale out, and the number of contracts you will buy. And that's part of risk management and position sizing. And it's not as if when we go from a 4-figure account to a 5-figure account to a 6-figure account to a 7-figure account, we reinvent our trading. Not at all, because I've traded all 4 of those sizes. All that happens is the way in which we budget our trades, including day trading. That's all that changes, right? And again, I call that the holy grail because, well, frankly, it is. If there's any weakness in a lot of traders' games, it's not the lack of secret squiggles. It's oftentimes, which direction am I entering in? Notice how important directional bias just in this past hour was with saying, yeah, I don't really love this S&P trade, even though I was looking at ways to maybe control risk. But then we came up into the hot zone. That makes no sense. And then the way in which gold and crude make perfect sense because they were trading with the path of least resistance. And our position sizing can be a little bit more confident, if you will. Those are all adjustments that we have to make. But if you don't know how to make them, well, then that's where the problem of blowing up accounts and things like that happen, right? So I like to keep it where, according to the math, avoiding, other than catastrophically crazy geopolitical events and massive gaps, it's actually hard to blow up an account when you run the math in a way that respects risk first, not reward, that respects true edge and discerning entries, not just slinging trades because that's what you think day trading is. I've only put on 2 trades this morning. Do I care? It's 10:20. I could probably call it a day. That's a great day. Does that make sense, gang? A quick little gold play, quick little crude play on a Friday morning. I'm pretty much done, at least for the morning. And then I can take advantage maybe of this afternoon because, again, there are multiple windows. It's 5, right? And I'll teach you those 5 in the class tomorrow. All right, so let's keep going. What do I think about switching from HPMR strategies if it stays double green? Lewis, if we have a trending environment, say ZB continues to trend higher, they'll stair step. If we have a trending environment, yes, you bet the multi-trend is going to tell us as well. That's why we include that with the class. If we have a trending environment, the grab candles are going to indicate that as well. It's so color coded in your face. It's almost hard to argue with what it's telling you. We include the grab candles as well. So grab, stair-stepping HPMRs, multi-trend. I mean, you notice it's coming at you from every angle, reminding you if we're in an uptrend or a downtrend or chop. So, I'm with you, but would I continue to use the HPMR? What you'll find oftentimes is that the HPMR and the wave even sometimes start to overlap, which is really powerful in trending environments. So you got it. I mean, I think we do want to your point, Lewis, if I may sort of boil down the value of what you said, do we want to change what we do in a trending environment? Yes, but we need to know it's trending first. So the question is, what tools on your chart in a very binary yes or no way tell you we're in an uptrend, in a downtrend, or in a chop, right? And that's why I love that multi-trend. Boy, is it powerful. Yeah. So let's see. Yeah, for those of you wondering, what about that yellow trend? I'm going to tell you all something, gang. Some of the most common day trades you're going to get are yellow trend day trades. And in fact, I actually prefer yellow. I mean, we'll get into a lot of that tomorrow, but look at what happened. Remember I said the history of the trend is so powerful? Would I presume if the trend that preceded the chop was up, that suddenly we're going to head lower? No, I'm going to work with that bias, work with that tendency. And then remember I mentioned we want to scale out and things of that nature, that the value in scaling in and scaling out is, I don't know how far the markets are going to go. Gang, I don't know how far crude's going to go higher today. That's why we scale out, we move to break even, and then we get out of the way and we look at a much more ambitious T2 or T3, right? It's 10:22 in the morning. This is all red. I mean, crude alone is going to, pretty much make my morning, and I'll probably tell my husband we're going to have we'll go out for a nice long lunch before I see members for the close. But let me take the flip side of this. What if we don't pay ourselves while we can, right? So crude looks like a great example, and everyone celebrates. It's great. But what if we don't pay ourselves while we can, right? Gold is the result of that. Sure, crude's going higher and great, and that's awesome. But what if we don't? Here's gold. Gold reminds us the Steve Miller Band of trade management. Sometimes you need to take the money and scale out. That was the first. Yeah, take the money and run just sounds better. But the first version of that song was take the money and scale out. I don't know, little known truth. Take the money and scale out. Move to break even. They just couldn't find anything that rhymes with that for the song. Take the money and run does have value. Take the money and scale out is what we do. And gold is a great reminder of don't get greedy. Don't be double mule. What is double mule? Twice as stubborn, half as smart. So yeah, on one hand, you might say, oh, we should just let it go. And crude says, yeah, let it go. Get out of its way. But first we have to scale out and move to break even. So here's the flip side of that. Does that make sense, gang? It's easy to say, oh, look at crude, but I want to show you where if we did not have that properly placed, prudent profit target, I love alliteration, that worked great. We don't have that. We could get stuck in having that pretty nice 4-point unrealized winner. Dang, that's $400 per contract. Turn into a loser, right? And that's what we want to avoid. And that's where first targets are really part of risk management. And gang, I know it doesn't sound sexy to say risk management and position size are everything, but they're really important, which is why we set aside a segment of the class to talk about the importance of that. Where do I place them? And they're a lot easier to find and place than you think. And then the HPMRs help us with that, by the way. The HPMRs, the space between them, told me where I need to put that first target. So the HPMRs, which is really the featured indicator for this class, help me with that. Not only did it help me get me in, they help get me out. That's really important. Yeah. So I hope that makes sense. All right. So again, gang, I wanted to give you all a little bit of a sneak preview. And, whenever I do these live streams, I kind of get, I kind of do these last minute. So, and I thought, well, you know what? I've got some time this morning. Let's do this. We got the class tomorrow. I really want to prep those of you that have already signed up for the class. How many of you signed up for the class already? I think quite a few of you. And it's great. Now let's give everyone a little bit of a sneak peek. And then I thought, well, Rog, it could go really badly or it could go really well. But either way, my feeling is it's not just, I don't want to just sit here and say, look how well I traded by my class. Well, I kind of do want to do that too. And I could today. But I figure if nothing else, if I can say, hey, this is how an experienced trader manages risk. And if you watch me lose, that's really valuable too. So I never know what's going to happen with these. I'm glad we had two really nice winners. But I'm glad we had two kinds of winners. Gold, which reminded us, hey, it's a tricky short. It's a tricky short, but there's your validity, and there's how you want to take the profit off the table. Crude was a beautiful buy point, and look how much better crude is following through because it's in line with those levels on the daily. It's in line with the path of least resistance. And all we need is the HPMR to tell us, yeah, you can buy in this zone. And that's my hope. I hope you all see the value in this. I hope you all see the value in color coding everything, where I'm not doing anything manually. I'm not crunching numbers really manually. Everything's on the screen because you have to make quick decisions when you're day trading. Every fresh candle comes every 5 minutes. I figured if it works out great, which I was hoping for, awesome. And if it doesn't, you still learn something. And that's what I always hope you all get when you either attend a class with me or join me for a live trading session. All right. So I hope this definitely turned on some light bulbs. I hope those of you that were kind of on the edge saying, oh, wait a minute, I think I can do this. It's color coded. I can get my 9-year-old to do this. I hope that this was something that shows you, yeah, it's kind of quick, but since everything's automated, it becomes much easier. And then once you get the checklist and you understand position sizing, there's fewer moving parts. We're not getting in and getting out like crazy, not at all. And I'm pretty caffeinated up, and I'm still finding a spot, taking the opportunity, being discerning about day trading. I was joking with the group. I said, if I could call myself anything, I'm the world's most boring day trader. But what do I care? I put in 2 trades, went 2 for 2. It's 10:30 in the morning. World's most boring day trader is this girl. So if you want to be the world's most boring day trader too, then maybe that's what we should have called the class. All right, gang. So let's wrap it up here. I figured I'd give you all a little look at what my mornings look like. And remember, I hope you also, again, whether I see you tomorrow or not, make sure you know what's going on with the calendar. Make sure you know what's going on with the dominant trend. Have a way to measure candle by candle by candle what that trend is doing. That's oftentimes where a lot of day traders get hurt. Notice how quickly, and if you can watch the replay, notice how quickly we went from, yeah, maybe we'll buy short the S&P to, no, I'm not allowed to do it anymore because the structure changed. And that's why this indicator down here, right, tells us it's a warning or go for it. But those transitions are huge. Those transitions are huge. Okay. All right, gang. Be good to each other. Thanks for joining me for our impromptu stream. I'm looking forward to seeing y'all tomorrow. simplertrading.com/guide. Basic class has 30 days of HPMR. Pro has 90 days. And the Elite, which is bonkers, you get the class and you get an entire year of the HPMR, which is just, we kind of asked the office if we could do it, not really expecting they would say yes. And yet here we are. So I'm really excited about that Elite offer. So gang, thanks so much for your time. I'm looking forward to seeing you tomorrow at 1. By the way, we do record the session. So if you're going to join me for live trading on July 1, and you're just going to catch the recording of the class at your leisure, or if you want to review it, absolutely. Remember, if you join us for live trading, you've got plenty of time before that happens. And you can watch the class as many times as you need to, live or even after the fact, with the replay that we have of it. So that'll be great. And then once you buy the class, you'll get the current HPMRs. So, and all the different indicators on my screen here. So there are a number of indicators, Darvis 3.0, that multi-trend, the slow stochastic, the wave, the grab. Yeah, we included that as well. So you've got the entire dashboard. All right, gang. I'll see you tomorrow. Be good to each other.